Shadim Shari. Important day today, CPI. So let's talk about that. But before that, let's talk real quick about FNV. It's Wednesday, August 14th, 2024. All right, real quick. FNV came out with earnings last night, lackluster. Not a surprise. And I'm calling an audible. I will be exiting. I trimmed yesterday. Yesterday, I trimmed yesterday before earning on the pop. I'm glad I did. Look like it's gonna be down a little bit. Not a big deal. I'm still in a position, but I have plenty, if not more, exposure in GDX. FNV was my side bet in addition to GDX because I felt 2 quarters ago that it could provide more bang for the buck. And after what happened the last couple of months and going forward, it's very clear that the exposure to the Panama mine is going to be an anchor for the next 2 quarters, because you know how I'm using the same analogy as, say, Pfizer with COVID vaccine. It took a long time for Pfizer, in fact, 2 years from the start of the decline in vaccine to rid itself of the negative comparison. And that's the problem with Franco. The mine situation in the Panama is dead. It's over. Okay, they're closing that mine. Panama is has decided. The government has decided that they rather, not deal with the mine because the people are angry that it's destroyed the environment. We don't need to go into that. The bottom line is that mine is done. There's no way to go back and make money off that mine. So Franco faced bad comp, at least for the next 2 quarters, I believe. So why bother? Why bother stay in here and deal with that stuff? I'm fine with GDX. Would I buy more GDX on a dip? Yes. Would I trim FNVE on any pop into the 120, 124 range, or even up here? Yeah, but I'm not adding more. Okay, so the bottom line is I decided that I'd rather put money into GDX instead of FNV. That's it. Just want to update people on my take on FNV and the earning. Nothing on the earning was a surprise, and I'd rather move my money somewhere else where there's better return. Okay. All right. Let's talk about CPI. My expectation for CPI is a very. I think the market expect like a flat, like a 3%. I expect 2.9. I expect a number that's below 3. Let me take a look. I think the market is expecting 3. Let me go to trading economics to see what the consensus is. The question is, who's in the consensus? The consensus, I don't have much confidence in the consensus. Okay. All right, here I look it up. Inflation rate year over year, the consensus is at 3%. My own expectation is below that. My own expectation is 2.9. Month over month, there's an expectation of a 0.2% increase. Core inflation year over year is expected to go down a little bit. It was 3.3%. Now for this today's number should be 3.2%. All right, so basically 3.2 depend on what number you want to look at. Okay, so I think it's gonna be coming with a 2.9. I have understated inflation in my own computation for a long time because I think rent is all messed up as far as how the Fed compute inflation when it comes down to rent. That being said, be careful. Um, I'm trimming any pop. I did not trim a lot yesterday. I bought a little dip in sector that I liked, but I think pre-market, if there is any whiff of hopium, I'm trimming more, especially in the tech area. Okay, let's take a look at QQQ. There is a lot of okay. The QQQ has not recouped half of what it lost at the top. Okay, so despite all the hopium and bullish take that this is the coming of the next wave higher to all-time high, new high for the year, I don't buy it. Okay, I don't buy it. Here's an interesting stat that I want to highlight what happened. Last CPI was a surprise, correct? Last CPI was a number that was lower than expected. Do you know what happened to the market that day? It was 7-Eleven. The store that opened all day long. 7-Eleven. Right there. That nasty candle. That's the all-time high. The rug pull that you see. That's the last CPI report. Okay, that has nothing to do with Japan carry trade sell-off that we have. That's when weak CPI, you know, if you pay attention to the financial market talk the last many years, you hear good news is good news, and then there are good news, bad news is also good news, and then the third alternative is, well, there's four scenario. There's good news is good news is bad news is good news, and then bad news is bad news. Okay, what that's saying is there's one scenario where good economic data, good for the market. Bad economic data is also can be good for the market because the market interpret bad econ equal better growth, or the Fed is going to do something good for the market, which is nonsense. The Fed cut rate for one reason: bad things coming. Okay, but the market can misinterpret the Fed action sometimes. That's why bad news equal good market. And then the third scenario is good news equal bad market. Good news is what we potentially can have here is lower CPI. That's good news. Bad market. Okay. Now, how does that happen? How does good news equal bad market? That's what we had last time. Okay. Back in July, we had it. So inflation is not good, but a fast deceleration of inflation translate into weaker consumer than expected. That's when, you know, good news is bad news as far as the market reaction. And I think that's what the what that's what I think the market will react based on what happened last month. I don't know what the bots are programmed to do. At the end of the day, the bots are programmed to trade however it is programmed. We don't know, but be wary of good CPI. It could be good for a certain sector like gold. It could be good for TLT. It could be bad for consumer discretionary because guess what? Inflation come down because of weaker demand. I have been saying this for a long time. When it comes down to consumer, when you hear supplies and demand, as long as the consumers are willing to pay up, keyword is willing to pay up, businesses will raise prices. Why? Businesses' motive is profit, whether to make more profit or to protect profit. Okay? Understand that concept. If you raise costs, if you raise wages, business have to raise prices to protect margin. And even when the cost of good, the, for example, take a look at restaurant. Okay, restaurant was under pressure to raise prices because we have inflation on food, the ingredients. We have inflation on wage. No doubt those are not there right now. There is not one person that can tell me that there are pressure on wages. Yes, wages are elevated at restaurant, but food ingredients are not. That's factual. That's not hypothetical. Okay, but it has not stopped a lot of restaurants like cheesecake to keep raising prices because if people are willing to pay up for a slice of cheesecake, they will do it. That's what inflation happened. Okay, it's inflation is never about, oh, everything's go up, so we have to raise. No, it's greed. Greed is a big part of inflation as well. Business only cut prices for one reason, just like the Fed. The Fed cut rate for one reason. They see trouble in the economy. Business cut prices for one reason only: lower demand. When the demand is low and the higher prices, there are times where business can still maintain their level of margin and profit by raising prices with falling demand. There are that time, and that has been going on for quite some time in the past 9 months. We all heard about shrinkage, right? Shrinkage in like whether it's Pepsi or any business where they shrink down the size of the potato chips bag. There's many ways that a company can maintain profit margin and revenue when demand is falling by shrinkage in what they sell. So they oversell, they overprice stuff. Okay, they make up for falling volume with higher prices, but there is a turning point where that strategy stopped working. Demand keep falling, and then sales roll over, and then price cut happen. We saw that in auto market, right? You saw that. There is not one person that are listening to this video and tell me that the auto market is healthy, that prices are still going higher. There is not one person that can tell me that prices are still going higher. Take a look at the stock price of other automaker, okay, including Tesla. They are struggling. Used car. That's one part of the CPI that I think is going to show very well is falling car prices, both on used and new car. I believe traveling is also hurting. I know for sure. Uh, I get a lot of promotional email from JetBlue, from other airline. There was time last year and the year before where there is no discount, just like auto. We see no commercial. on deals. Now you turn on YouTube and watch any YouTube videos, I guarantee you, it won't be long before you see a car commercial with incentive, right? And I get plenty of incentive email and texts on airline tickets from many different airlines. So that happened. All those promotional stuff show up everywhere is when consumers are hurting. Sales are falling off the cliff. And the higher price that they raise stop working. Okay. It was masking weaker consumer demand the past 9 months, but I don't think that is gonna happen anymore. And that's when you're gonna see negative comparison. And I think good news is gonna turn into bad reaction. And that's my expectation. Okay, you can disagree with it. You can think you can be in the camp that lower CPI will head to an all-time high. New 52-week high is waiting for the QQQ. I don't think so. Okay, so that's what happened with the QQQ. Let's take a look at the SPY. Same thing. I'm pretty sure. 7-Eleven. Okay, so 7-Eleven right there. Okay, so that's the last CPI. SPI went up 3 more days, and then that's the end of that move. Okay, so be careful. Be careful what you wish for. Dia, 7-Eleven. Look at that. Dia did better. Okay, Dia did better. But QQQ hit the top on 7-Eleven. Not. So be careful. Okay, at the end of the day, I think you should be very careful on being giddy on the CPI. I think what you're faced with is potentially the market treating good news as bad things coming. All right. Other than that, busy day for sure. Tomorrow to me, tomorrow is more important because I think it's a foregone conclusion that the Fed is cutting rate in September. How bad the job market is going to be the signal whether Powell cut rate by 25 or 50. Okay, it's CPI and PPI, PCE, all those things are down to the level where he's not concerned. Okay, um, he just need a reason to cut rate by 25 or 50. And the weaker the job market is for the next 4 weeks, because the next Fed decision will come September 18th. So in 4 weeks, if the job market decline worse than expectation, both in the jobless claim as well as unemployment rate, all that stuff, that is what determined the Fed decision. I think CPI, sure, we want to see lower CPI today, and in 4 weeks we want to see another lower number declining, but all those expectations should translate into worsened consumers. Okay, because like I said, price decline, deflation, that's the opposite of inflation. Deflation happens when consumers are weak. Okay, not because business are in the goodness of their heart lowering prices. No, they lower prices for one reason. Okay, when sales falling off the cliff and promotional are not working. Bye bye.